Q2 2024 numbers are in, and venture capital investment is the highest it's been in 2 years. This jump in investment is very much being driven by artificial intelligence. So, we're going to dive into what's driving that jump in investment a bit. We're going to talk about a few of the key investments that have contributed a lot to that jump. We're going to talk about what those companies do, kind of where the investment's going in the AI landscape. We'll touch briefly on IPO markets and how those are reacting to the jump in investment. And lastly, we'll end with Andrew Ng's AI fund and talk a little bit about what they're up to. If you're new here, I'm Andrew, and I talk about AI through the lenses of technology, philosophy, economics, geopolitics. Let's get into it. So, like we said already, AI deals lift US venture capital funding to the highest level in 2 years. I think this is pretty significant because more recently, in the past, I'd say 3 to 4 months or so, there's been a lot of talk around a slump in artificial intelligence, a slump in investing, a slump in releases. And my thoughts on all of that have, since I first heard that conversation, have always been I don't know if I actually believe that because when I look into the data, when I look into what's actually happening, and if you follow the money, it seems like there's still a lot of activity. However, the money's not being funneled to applications, it's being funneled more to infrastructure and hardware. And basically, what I'm seeing in this reporting kind of justifies that as well. Okay, so it's a pretty big jump. From Q1 to Q2, there's a 47% jump in funding. Q1, there was $37.8 billion raised by startups, and in Q2, jumped up to $55.6 billion. And like I said, largely driven by AI. Still a lot of the same concerns around, okay, there's more money being poured into it, but where's the revenue? Is it going to pay off? And so on and so forth. Um, Casper Wang, who's a partner at Sapphire Ventures, is saying that a lot of investors assign a premium to everything AI, which makes sense. I mean, it's extremely expensive to train models and it's extremely expensive to run them and infer them. There's an enormous energy demand. It's just a really expensive game. And so, yeah, there's a premium being assigned to it, and it's still pretty early. Yep, here emerging VC managers are already feeling the pressure of a lack of proven returns. That's got to be tough. Also, large firms are dominating the investment right now, like A16Z. That's interesting to see. So there's a lot of consolidation in on the funding side too. In terms of startups being funded, we're going to talk about three. So the first is Scale AI, the next is CoreWeave, and the last is Elon Musk's xAI. So we'll talk about how much money they're raising and a little bit about what they do. So Scale AI just closed a Series F, so they're a little bit further along, and they just closed 1 billion in financing, and that's at a $13.8 billion valuation. So they've been around for 8 years, and they've really been thinking about infrastructure since the beginning. So their three pillars are data, compute, and algorithm. So those are the three pillars that the founder really imagined would be for artificial intelligence, and they really tried to position themselves to supply services along that data pillar in particular. So definitely kind of lower level infrastructure level stuff. They're a service that provides solutions for managing data that's used by AI systems. So here's their website. So I think what's interesting, if you go up here and look at their customer list, you'll see some pretty familiar names. Let me zoom in a bit for you. So on the generative AI side, OpenAI is a customer, Cohere is a customer, Adept, NVIDIA is a customer. I mean, these are companies that when we think of them as sort of building the infrastructure for artificial intelligence, and they are customers of Scale AI. So Scale AI is pretty low on the tech stack, which is a good thing, right? It's a really good position to be in. They also have a bunch of government customers, Army, Air Force, Defense Innovation Units, and so on. Oh, and on the enterprise side, Microsoft, Meta, GM, NVIDIA. It's a pretty impressive customer list. Next is CoreWeave. So they just secured $1.1 billion in the Series C round. driving the next generation of cloud computing for the future of AI. I think what's interesting about that headline is even if we jump back to Scale AI's press release, they mentioned these three pillars, right? Data, compute, and algorithms. Scale AI is focusing on data, and CoreWeave is focusing on this compute side, right? Cloud computing for the future of AI. I mean, they even have Eric Schmidt listed here in the funds managed by list. So, I mean, they have some pretty high profile technologists pouring money into their company. Let's read this quote from the CEO. CoreWeave continues to push forward as a provider of critical infrastructure in the development of AI, and the high caliber of investors who continue putting their trust in us validates the enormous opportunity we have to define the next generation of cloud computing. CoreWeave is designed specifically to tackle the most complex and pressing challenges in high performance compute. With this new round, we will continue investing in and working with the largest AI enterprises in the world. So here's their website just to get a sense of what they do. So, a modern cloud purpose built for cutting edge AI. CoreWeave Cloud empowers you to train, fine tune, and serve models up to 35 times faster with availability and economics that empowers scale. This paragraph's actually pretty interesting because it goes a little bit more into the details. So, CoreWeave provides access to the industry's broadest range of NVIDIA GPUs specifically. So, if you go up to the products, they even have like NVIDIA Blackwell, HGX H100s, and so on. So, those are some of the chips that they give you access to so that you can scale your compute across that meets the complexity of your workloads. Our Kubernetes native infrastructure delivers lightning quick spin up times. So it sounds a bit like maybe an AWS competitor, but kind of like optimized for artificial intelligence needs. The last startup we're looking at is Elon Musk's xAI that raised $6 billion to go challenge OpenAI. It's definitely one of the larger investments that happened in Q2. So, for the most part, what Musk is trying to do here is he wants to build another foundational model. He already has one called Grok, but it's like so-so. It's not that great. Like it doesn't really stack up against Anthropic or OpenAI stuff. So, he wants to build a new version of Grok, train it with a boatload of data and a bunch of GPUs that he bought from NVIDIA to compete at the foundational model level. So again, if we go back to Scale AI's press release, I really like this three-pillar framework: data, compute, algorithms. You could probably map XAI to the algorithms for the most part. It's more model, I guess. That word has perhaps evolved since this was released, but you never really know with Elon. He's probably going to be doing a variety of things, but building out Grok is definitely a goal. He's talked also a little bit about his gigafactory of compute, which the idea is he purchased a lot of NVIDIA GPUs to build out a gigantic data center that he's going to use to train Grok. But I mean, once you train it, what are you going to do with the GPU? So I'm sure he'll commercialize those somehow as well. So maybe he's getting a little bit into the data center game. Not really sure, but primarily xAI is intended to be a foundational model that will compete with GPT and Claude and so on. So if we come back to this original article, AI deals lift US venture capital funding to highest level in 2 years. I think the detail that's missing from this headline is specifically into the infrastructure of artificial intelligence. That's really important because when we get to the IPO conversation, we're going to see that haven't been a lot of returns yet. And there also hasn't been a ton of revenue being generated yet. So a lot of this investment is happening at an infrastructure level right now, and that has a very long payoff cycle, right? They're kind of building up the ground that can later be used to build applications on top of, which will then generate revenue, which will then stimulate IPOs, and so on and so forth. So here's the line from some reporting from Finimize, which is really nice. Despite increased deal activity, the IPO market hasn't kept up, even with notable VC-backed companies like Rubrik going public. Again, the story here is infrastructure is being invested in. Until infrastructure is really there, you can't have sophisticated applications. Until sophisticated applications are there, you can't have interesting commercial and end user use cases that generate real money, generate revenue. And until you have real revenue being generated, you can't have IPOs. And so there's a series of dependencies that are kind of being knocked out one at a time. And right now we're pretty early on. We have some interesting models that have been built, and that stimulated a lot of data center development and funding into the infrastructure. And the next waves will come with time. Let's wrap with Andrew Ng. He's one of my favorites. So he announced recently he's planning to raise 120 million for the next AI fund that he's managing. So for that fund, it looks like he's already raised about 70 million. So there's another 50 million on the table. If you're an investor and you want to put some money into a fund, it could be a good one. But he's a really interesting person, and he's good to follow in this space. You know, his background is super impressive. He was the founder of Google DeepBrain, co-founder of Coursera, and he was recently appointed as a board member for Amazon. Um, like it says here, one of the most recognizable names in the AI community. He also runs this website called deeplearning.ai, which is fantastic. Okay, so here's AI Fund's website, and it's interesting to look at their portfolio. Right off the bat, we have sort of an instructive detail, and that's the categories. So there's two categories really. There's applications and there's infrastructure and developer tools. This should sound familiar by now. So this is exactly what we were just talking about. Right now, a lot of the money is being poured into infrastructure. He also has developer tools tacked on here, pretty related. And after that, applications will come. If you just scan the AI fund's portfolio and you count roughly how many infrastructure investments they have, it's not a ton. They have 7. They should have more application investments than infrastructure investments, which they do. That makes sense. With infrastructure, you get more apps on top of that. So these are all their applications. I looked through these a little bit earlier. I'm actually not super familiar with pretty much any of these companies. So a little bit of homework for me to dig into these. But if Andrew Ng and his team think that they're interesting and think that they're a good investment, then I would like to know what they're up to. So I will check that out and probably report back later. Thanks for tuning in. Again, I'm Andrew. I talk about this and other related stuff here on YouTube. I'm new to this space. Give me some feedback in the comments. That would really mean a lot to me. I just want to do stuff that's interesting and useful for you. So let me know what you think. I'll catch you later. Bye.